Hi, and thanks for listening to our Pension Risk Transfer podcast, Institutional Insights. My name is Dave Wagner, and I'm a Senior Distribution Associate on the US PRT team. In this episode, I'm joined by Aysha Patel, new Business Origination Lead in our UK PRT business, and Alex Gagnon, Distribution Manager in our US PRT business. Today, we'll be discussing the top 2023 PRT trends expected in both the US and UK markets and reflect on the achievements and challenges of 2022. Welcome, Aysha and Alex. Both UK and US PRT markets experienced a very busy year in 2022. Can you both give me an overview of both markets and some of the key takeaways from 2022? Alex, let's start with you.
Yeah, thanks, Dave. Good to be here. In 2022, the biggest story really was the size of the market. I think we are estimating the market to have seen about $53 billion in sales this year, which is a new record, easily surpassing the prior record, which is for 2021, which is with 38 billion. A big reason for that number of sales was the IBM transaction, which was a mega jumbo deal, that took place in the third quarter, of 2022. That was 16 billion. That was the largest transaction since 2012. That was a GM transaction back then. So, if you have a $16 billion transaction, that's really going to help drive sales in a given year. But what we've also seen is we've seen an increase in volume as well on the smaller end of the market. So, what we're really seeing is kind of across the board, more volumes this year, which is a bit healthy. Seems like a healthy trend. One other takeaway from this year, which was interesting to note, was the volume of sales was a bit more evenly spread out throughout the year. Historically, the fourth quarter would get a bit crowded or busier if you wanted really kind of high demand in the fourth quarter, and that would sometimes lead to insurers not having the capacity to meet the demand. So you'd see a bit less participation on certain transactions because insurers just had to be a bit more selective as to what they participate on. So, and I don't know if that's going to be a trend for years to come, but it was interesting to see that for 2022 because a more even demand might allow insurers to basically really participate or provide the capacity on all the transactions that they would like to.
Wow, thanks, Alex. Yeah, it sounds like the U.S. market's really experiencing some great growth, particularly given some of these larger transactions in the market. Aysha, could you please give us an overview of the UK market in 2022?
Sure, thanks, Dave. It's been another really strong year in the UK market. We're expecting to see volumes of just below 30 billion or so. So just waiting for those final numbers to be announced by the different insurers. On the face of it, that would suggest that this has sort of been the fourth best year on record. However, that's sort of masked a little bit by the economic backdrop where we've seen rising gilt yields, which has meant that liability values have come down. So transactions sort of towards the back end of last year will have looked a lot smaller than if they'd been done sort of 1 or 2 years earlier. I think if you sort of normalize for that and, you look at sort of old money terms, then it's probably the sort of second best year on record. So really another absolutely fantastic year for the UK PRT market. So rising gilt yields have meant that liability values have shrunk, but we've also seen improvements in funding levels as well, because the shrinking of the liability values has actually outpaced the decline in asset values. And so funding levels have generally improved as well. So what that means is we're potentially going to see a huge step up in demand going into this year and the following years onwards.
Thanks for that context, Aysha. So Alex, I understand there's an increase in demand for de-risk in the US as well. Can you just tell us a bit about what's driving that in the market?
Yeah, sure. I mean, there's in the US, I think there's the couple the old traditional factors that have been driving the demand for a number of years now. One is you're looking at, employers are really moving away from the defined benefit space. It's no longer used as a, part of the total compensation package. So what that means is it's more of a liability sitting on the balance sheet, and there's costs associated with it, and those costs are also rising. They've also have increased over the last 10 years. One measure that a lot of people kind of refer to is in the U.S. the plan sponsors need to pay an annual per participant or per member fee, if you want, to the Pension Benefit Guaranty Corporation, PBGC, and those fees have increased over the last years. We're looking at 2023. That's about $96. Well, it is $96 per participant. It was $35 per participant in 2011. So that's almost triple that. So I think those factors have been driving demand for quite some time. Another factor is basically just the normal, the normalization of the market, if you want. Since 2012, where you've seen GM and Verizon come to market, we've seen a steady increase in volume year over year, with a lot of transactions making headlines. You're looking at IBM last year. You're looking at Hewlett Packard 2 years ago. So you have 10 years of transactions. I think we've seen constant growth over the years since then, and I think you've seen a lot of transactions make the headlines and be in the press. So I think a lot of plan sponsors are a bit more comfortable now with these types of transactions. And then lastly, I think a key word is, and then Aysha, you mentioned this as well, is what could be a catalyst, if you want, in terms of driving the demand. It's the improvement in funded status overall as well. It made it across the pond as well for us in the U.S. But I think that the interesting is it's not only that the funded status has improved, it's that funded status have improved during some crazy volatile years, right? If you're looking at over the last 2 years, the markets have been up, down, and so for a lot of plan sponsors to find themselves in a better funded position, against that backdrop of economic uncertainty, and also looking ahead, it's not like there's a clear picture either. So I think a lot of plan sponsors can look at this and say, maybe now is a good time to either partially or fully de-risk my plan through a plan termination.
Awesome. Thank you both. So it's pretty clear that both UK and US PRT markets, achieved a lot last year. On a more personal level, what are some of the business highlights you experienced in 2022? Alex, maybe let's start with you again on the US side.
2022 was a year to celebrate. We had a historic year. We met the historic threshold of 2 billion in sales, which was a record for us. And along the way, we picked up our 2 largest transactions. We won this past year as well, both over 500 million. So it was very nice to have a great year in a year where the market in general did very well.
Aysha, anything on the UK side you want to add there?
Yeah, definitely. I mean, first of all, fantastic to see the US business doing so well. So great to hear that from Alex. I mean, on the UK side, we feel like we've had a very strong year here in the UK team. I think also we have continued to write a business as the whole of market provider. So again, servicing the much smaller end of the market and also those at the larger £1 billion plus end of the market as well. So a really great outcome for us across the board. We also continue to innovate and try to look for new solutions and new ways of meeting clients' needs when they come to want to do a bulk annuity with us. And then finally, I think it's probably also worth mentioning that we are celebrating 35 years in the bulk annuity market in the UK, something you may have heard us mention over the course of the last year. We did our first transaction back in 1987 with a publishing company called Routledge and Keegan Paul. And really, it's fantastic to see how the market has shaped up since then and how it's grown both in the UK and obviously overseas as well.
That's awesome. Great to hear about both markets. So, Aysha, changing gears a little bit here. At the end of last year, you wrote an article for Professional Pensions called "The Top 5 UK PRT Trends in 2023." Can you just please talk us through a few of those trends and what we're expecting to see this year?
Sure, no problem. I'll save everybody talking through each of the 5 trends in a lots of detail. The article is out there to read, but it's probably worth starting with saying that the industry expects 2023 to be an absolutely record-breaking year, predicting that it'll surpass the levels that were written in 2019. So that's a sort of 44 billion, and really with that sort of backdrop, it's we've pulled out a few trends that we're expecting to see come through. I think the first one that I would highlight is probably the sort of shift towards full scheme transactions. So as we've already said, scheme funding levels have improved significantly across the board, from small all the way up to the big schemes. And so we're really seeing that schemes that thought they were probably 5 or 6 years away from their end game are now much closer and are able to afford full insurance or just about there. So definitely a sort of shift towards the full scheme transactions. I think something to draw out as part of that is that we will expect to see, that in itself can bring some challenges. So schemes that may have had, liquid asset holdings that have timed the runoff of those liquid assets with their sort of end game journey plan might now find that they are in a position to do a transaction, but still have some, a significant proportion of these assets. So really, I think we'll see another trend where insurers are working hard to come up with solutions for schemes to use those liquid assets in the purchase of a bulk annuity in the most sort of cost efficient way. So I think at the larger end, we're expecting to see a return to the mega deal. So 2019 was characterised by the mega deal, where there was sort of 6 transactions over the £2.5 billion, and I think we are expecting this year to yield some transactions that are, even potentially bigger than that. So it'll be interesting to see how those schemes approach the market, especially in a market where we're expecting to see increased demand. We potentially will see schemes, taking a slightly different approach to market, so more of a partnership style, whereby they work with an insurer in a sort of open and transparent way to try and achieve their buyout objectives. So yeah, definitely seeing more at the larger end, and therefore probably a lot more bespoking of solutions, given the sort of complexity that you tend to see on larger schemes. And then just moving away from the larger side a little bit, I think we're expecting to see some streamlining and standardization at the smaller end. Generally speaking, in a busy market, smaller schemes tend to get crowded out. And I think in the UK, around 75% of schemes have 100 million of assets or less. So a huge number of schemes in the UK fall into that category. And I think us, alongside other insurers, are considering how they can service that end of the market, and therefore we were expecting to see more streamlining and standardization to sort of improve efficiency and therefore increase capacity for the smaller end. So that's probably just a few of the things I'll probably pull out from the article that we put together.
Thanks for sharing. So, with the increased demand expected, it sounds like there may be a concern around insurer capacity in the UK. Do you have any idea of how insurers are, expected to cope with that increase in demand?
Yeah, I mean, very fair question. There's definitely expected to be quite a step up in that demand, and therefore potentially, create some challenges when it comes to insurer capacity. It is a huge and exciting opportunity, but we do need to think about how we're going to be able to meet that. A few things I can probably think about are, obviously insurers are looking to grow their teams. So, the human resource aspect, humans are involved entirely, through the entire process. And therefore, from the pricing side all the way through to post-execution, we and others will be looking to grow their teams to meet that capacity, to meet that demand, sorry. And then other areas, looking to technology and processes, how can we make those, more efficient? How can we improve the pricing process, for example, in order to be able to quote on more transactions and improve our capacity that way? And then finally, I think, with the sort of commented already on the sort of mega transaction return, I think a lot of insurers will be thinking about how they can increase their capacity when it comes to writing these large transactions, and it really will be thinking outside of the box there and coming up with very bespoke solutions in order to increase their capacity at the larger, much larger end of the market as well. So probably lots of different areas that insurers are looking at in order to try and do that, get that step up to increase their capacity.
Awesome. Thanks, Aysha. It's great to know, we're thinking about this trend and focused on supporting our people through what's expected to be a record-breaking year in the UK. Kind of turning to the US side, Alex, what trends are we expecting to see in the US market this year?
Yeah, I think for 2023, I think right now, at least what we're seeing is expect 2023 to be a little bit like 2022. Right, the momentum from 2022 is carrying over. I think what we're seeing is similar trends in the sense of more, the larger transactions, and continued increased activity in plan termination. So, which seems to follow a little bit along with what Aysha was mentioning before. I think I will do the usual caveat with economic. If there's a recession hitting, who knows? A lot of people are talking about that. It could impact things. We don't know if it would and how it would impact it. But I think as far as what we're seeing in terms of trends, expect a little bit of more of the same. So it could be another very, very busy year for us in the US.
Thanks, Alex. With both markets experiencing increased demand this year, what should trustees or sponsors consider when coming to market in 2023?
Yeah, I can take that one first. At least I'll go first. I think preparation is key. I mean, it sounds like an old cliche,
You're taking my
I
answer, Alex.
think
No, I'm kidding.
sorry, but I think we're gonna have very similar answers. Yeah, I'd say, I think preparation just makes everything easier. Whether it's looking at your data and making sure that your data is complete and accurate, I think that will facilitate things. I think maybe in terms of I've alluded to the fourth quarter being usually a bit more crowded in the market. So if there's a way to plan around potentially not doing a transaction during that time, maybe that will help. But I think a lot of it comes down to working with an annuity placement advisor and working with a annuity placement advisor as early as you can, because I think there's a lot of experience now in the market. As I said many times during this podcast, it's been 10 plus years of very large volumes in the US. And so people have been doing this for a while now, and people have a good sense of what needs to be, how to prepare for these transactions. So I think if you work with a new placement advisor, you're in good shape.
Great. I'll add on to that. I think there's probably very little to really add from the UK perspective. It's very, very similar to the areas that Alex touched on there. I mean, we bang on about it all the time, and I think it's a very well trodden path as well in the UK. But preparation is key, and I think even more so in what is going to be an extremely busy market. Engaging early with insurers and being able to demonstrate that you're sort of transaction ready in the context of your data, your benefits, your governance structure, and your understanding of affordability is going to be pretty critical when coming to the market. And I think these are all areas that the experienced advisors will be able to help trustees and sponsors understand.
Got it. Makes sense. Thank you both. It's been very informative hearing both your perspectives. So we have one question left before we end today. Kind of a broad one. Where do you see the PRT market in 5 to 10 years? Alex, maybe we'll start with you here.
Yeah. This is my kind of question. I love these kind of questions because 5 years from now, I'm probably going to look at this clip and hopefully not laugh too hard at how wrong I was. But I think it's hard to predict the next 5 to 10 years. But I would say one thing we know for sure, right? I feel very confident about is the demand is there. I think you're looking at the U.S. DV corporate assets. It's about $3 trillion, right? So we sold 53 billion in total as a market last year. That's not even 2% of all of that, if I'm doing my math right. So, one thing I can say is like 5 to 10 years, I would expect more record years. I don't think 53 billion will be the record, 5 years from now. But, I'm going to answer your question with, I guess, more questions. Is what is that demand going to look like? That's going to be a very interesting thing to see. It could, I think Aysha, you mentioned it, like in the UK, there's like a lot of like mega, transactions coming up. I mean, the US also has very, very large pension plans. Are we going to see more of those mega deals? So is that going to be a bit more of a lumpy, if you want, type of growth in annual sales? And the other piece is how are insurers going to meet that demand? So are we going to see, we already have over 20 insurers in the market right now. Are we going to see some new entrants to meet that capacity? Are we going to see some reinsurers enter the space as well, provide reinsurance? And are we going to see, again, to your point, Aysha, like this is a very a ripe opportunity for innovation. How are we going to be, servicing a 20 billion, a $30 billion transaction in the future? So I don't know if I really answered your question by asking more questions, but I think that's kind of how I think about it.
So, Alex, that's really helpful. Aysha, maybe you can help answer my question with a little bit of the perspective on the UK side.
You're probably not going to be that pleased with my answer either, because I'm not going to put any numbers on it. But look, going back, sort of, if I was to sit here a year ago and say, what do I think the next 5 to 10 years would look like? I would expect demand, and that's demand rather than actual bulk annuity volumes, to increase, over the next 5 years, a decade, with a sort of peak more in the latter parts of the 2020s. I think, having just sort of given the highlights there around, improved funding levels, we're very much seeing that come forward. So that rise in demand will happen quite sharply and will be much sooner than what was sort of we were predicting potentially at the beginning of last year. Will I put some numbers around that? Because ultimately it'll depend on how the insurance market can increase their capacity in order to step up to that increase in demand. So that will be something that, we'll be interested to see. So yeah, maybe I'm sort of not really answering your question either, but I think really ultimately all market participants are going to be extremely busy over the next 5 to 10 years. It's going to be a case of us all working together to find the best way for the market to seize the opportunity, and also for us to be able to deliver the best outcome we can for trustee sponsors and their members.
Awesome. Well, it's an exciting time. There's no doubt about that. So thanks, Aysha and Alex, for your time today. It's evident that 2023 will be an extremely busy year for both the UK and US markets. For our listeners, if you'd like to find out more about PRT trends in the UK market, as mentioned earlier, Aysha recently published an article called Top UK PRT Trends in 2023, which can be found on our UK PRT website. We'll also be publishing our Global PRT Monitor shortly, which provides more insights into the UK and US PRT markets. You can subscribe to Institutional Insights via Spotify or Apple Podcasts. Thanks for listening, and goodbye. Legal & General Retirement America is a business unit of Legal & General America, Urbana, Maryland. Legal & General America life insurance and retirement products are underwritten and issued by Banner Life Insurance Company, Urbana, Maryland, and William Penn Life Insurance Company of New York, Valley Stream, New York. Banner products are distributed in 49 states, the District of Columbia, and Puerto Rico. William Penn products are distributed exclusively in New York. Banner does not solicit business there. The Legal & General America companies are part of the worldwide Legal & General Group.